Welcome to Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro from Sasfin Securities and Drikus Combrinck from Capicraft. Be sure to send your questions through email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV. Use hashtag Stockwatch. Gents, appreciate the time. I want to dump in. A bunch of folks have been asking about this Reinet disinvestment from British American Tobacco. Drikus, let's start with you. I mean, this is how the Ruperts made their money. Is this sort of telling us something about British American Tobacco, a dying industry, nice yield, but revenue getting harder and harder?
Yeah, I think it's a difficult industry. I don't think it's completely dying. You've got a lot of the new generation, for better or for worse, they're vaping, and the non-combustible segments are doing quite well within all the traditional tobacco companies. More people within the youth vape in Western countries than those in all the segments smoke at the moment. So there's a bit of a statistic for you. So it's not for me. I'm not invested there. But yeah, maybe a sign of the times. I was amazed to see that he sold something that I think would be quite sentimental to the family. Yeah. And secondly, Rupert, Johan is quite a bear. He's known as Rupert the Bear. And, to see him sell something that's regarded as a defensive asset is also quite a surprise. But we can only speculate as to where they're taking Reinet now, because they're not going to pay it out as a special dividend. They said they're going to reinvest it. But I do suppose there will be some share buybacks because it's trading at a very, very deep discount to NAV.
And David, it changes the face of Reinet, because we've had the pension business and then the British American Tobacco, which were, two very different businesses. It perhaps maybe focuses Reinet. I mean, we'll see what he does with his £1.2 billion.
That's, what's interesting is that I watched the share price. Mm-hmm. It went down, where we today, Wednesday. It went down on Monday, kind of picked up a little bit, and it hasn't really done anything. What concerns me is that 32 billion sounds like a lot, but it's not really a lot, the kind of cash that they've got. And, if you consider that Buffett's got, I don't know how many billions of dollars and can't do anything with it, you say, okay, Johan, what are you going to buy with it? Are you just going to concentrate on this, which is a pretty nice business, but it's not at the forefront of growth in the global economy. And I said, should I get excited about it? Nah. I don't like private equity type businesses unless they're going into the areas that we find exciting. So it hasn't done anything, and that tells you a lot. So the market just said, okay, sentimental or not, Drikus, The other point about it, just going on to what Drikus says about British American Tobacco, look at the booze companies. Mm-hmm. The youngsters are not, they're not drinking anymore, they're going for a different type of drink. All of those companies are under pressure. And I'd say the same for British American Tobacco. The value investors can look at it, but I don't think anybody's really interested in accumulating tobacco shares.
So, David, you kicked that door open, because I saw something over the weekend, to your point. Yeah. Youngsters are just not drinking. I mean, relative to generations before them. Does that make a stock like Anheuser-Busch, put some red flags around that? I mean, I know that they're trying to do other things.
Yeah, all of them. AB InBev, Diageo, Brown-Forman, Pernod Ricard, Carlsberg, all of those have come under pressure. And I think the kids are going for, it makes the younger generation exceptionally boring. But I mean, we're just going to have to live with it while they look at their TikToks and Instagrams, etc. But I think they are going for those pre-mixed drinks, that you buy in a tin or something like that. But it's something to watch. Yeah. It's a trend to watch. Yeah.
Drikus, would you be cautious on the alcohol beverage listed stocks?
Yes, no, absolutely. I think alcohol consumption per capita is declining at the moment for other forms of entertainment. Mm-hmm. Worse forms of entertainment, I'm sure. And part of that at the other side is a more health conscious, youth. And that's good, on the other side. But in general, fast-moving consumer goods are going to come under scrutiny with the new administration. There's a lot of concern in the US about what they put into their food, into their alcohol, into all kinds of consumer goods. So I just stay away from the sector as a whole at the moment. It's not particularly cheap. It's not discounting any risks that's out there. So, and yields are rising, and these things do tend to trade more like bonds than equities at sometimes. And you can almost buy the 10-year at 5%. So why bother buying FMCG company at a 20 PE plus?
Yeah, no, I take your point on that. So questions coming through around PGMs, broadly the sector. We've seen some upgrades on Platinum Group metal miners over the last few days. Drikus, is it time for PGMs yet, or is it still, let's get the bottom confirmed first? Because the metal themselves is not looking exciting.
Well, I think the bottom is confirming. Just looking at the platinum price, I'm not the best technical analyst out there. Simon, I'll leave that to you. But the little that I can see, it looks like it's forming a bottom. All the PGM, and that's amidst of a much stronger dollar. You would have expected in previous market cycles for a proper smash in the metals like platinum. It hasn't happened really. It's holding its own within a stronger dollar, and I do think that destocking that obviously we had a big restocking or rush for palladium with the outbreak of the war in 2022, and I do think a lot of that has been destocked. EVs are being taken up slower, much slower than anticipated, and at one stage or another, the OEMs, be they in China or in Europe, they're going to start buying some platinum and palladium again, even though less than before. I think this is not a demand story, but I do think supply is quite disciplined as well. We haven't really seen any increases in platinum production for a very long time.
Yeah, and certainly the Platinum World Council Group, whatever they are, they say we'll have a shortage this year. David, PGMs, are you going to hate them? You're going to channel Wayne for us?
You know what? The global economy is under pressure. Outside of America, I keep saying the catchphrase now is American exceptionalism, which means a strong American economy, everything else is weak. And we're seeing that Europe, UK, even China. And I don't think conditions are right for the market to turn yet. When rates start to come down dramatically in global economy, and we start to see growth picking up, we can start to look at that bottom. I agree with Drikus. It's not going lower than these current levels, but on the other hand, I don't think it's going to roar up. So I keep saying that the commodity trade, we're standing at the station looking down the track, but we ain't seeing that train coming. I think you don't have to be in a hurry to call it. Just stand back. It just doesn't feel right, even though infrastructure is like a big topic globally. We got to build infrastructure. Even here, everybody wants to build it, but there's no money.
Yeah.
So just you don't have to commit yourself.
Okay, then what about David MTN? Because MTN had a roaring yesterday, a little bit weaker today. I didn't see anything that came out, but I mean, MTN as a possible. I mean, this is a tough one. I mean, Ghana, Uganda, Nigeria, heck, South Africa.
It's ex-growth. It went ex-growth about 10 years ago. It's so difficult to read. They provide an absolutely essential service for us to survive. Without MTN, without Vodacom, we can't do what we do. But on the other hand, we don't really want to pay for the service that they're giving us. We resent it, and we complain about how much we have to pay for data. And against that, they've got massive capital expenditure issues, as technology develops. And they can't do anything with it. They've got these multi-million users in that, but they're not quite sure what to do with them. I just think this is, it's past its prime dates, yeah.
Drikus, your take on MTN or even Vodacom. I mean, David's right. In some sense, they're kind of utilities, but they've got this huge capex bill rolling around every next generation.
Yeah, sure. And Nigeria has really bitten them the last few years. The rest of West Africa isn't doing particularly well. They've got hyperinflation all over. So the accounting is always a mess, reading the statements, trying to look through the hyper accounting. And I think it was a last straw for the company or for investors, just throwing in the towel once the Nigerians went off the official Naira, and, it traded closer to parity with the black market Naira. And so the reporting had to catch down. And all of a sudden, the Nigerian operations were reported much lower, etc. I was excited about the fintech business in MTN, but they basically, selling a big chunk of that to, I think it's MasterCard, for far below what I thought it was worth. So when that happened, we just walked away, yet to return and yet to tickle my fancy.
Let's stay with, let's move into that banking. Question coming through about 91 and saying, I bought some, it's moved a little bit lower. Should I hang on? Should I pick up more? Drikus, your take on 91?
It's a quality asset manager, abroad and locally. It's looking cheap relative to its own history, relative to the market. But do remember that active managers are losing market share to passives. I'm not sure how far we are in that game. I'm not sure how far that will be pushed. At one stage, active management will be great again. Excuse the pun. But it's not now necessarily. And there's a lot of asset managers out there trading cheaper than 91. But I won't stand in anybody's way buying it yet. It does look cheap to me. It's a quality asset manager.
David, 91?
Yeah, good business. It depends on booming markets and rich economies where they are able to go out there and attract a lot more clients to sell their products, whether it's passive, whether it's active, whether it's an ETF. They're a supermarket of financial products. But Simon, you need strong economies. We haven't got that, I always say, even on the show many times, I say, Drikus tries to steal a client from me, and then I go and try to steal a client from him, because that's the only way we're going to grow. There's no new money being created, and that's what we're doing. So it gives you an idea of, and I might get NVIDIA, he might be short of NVIDIA, I make more money than him, I keep the client for a year, next year the client goes, it's that kind of game. So it's a tough business. They're a well-run business. I don't know.
Yeah.
I think we can look for better.
I think we can look for better.
Better industries.
Yes, better industries. I'll take you. So, James, you knew this question was coming. It does every time. Drikus, we'll start with you. Sasol, it's actually had a good year, but I suppose that is relative after losing, 50+% last year. Drikus, would you be looking at Sasol at this point in time?
Yeah, we started buying at about 130. I thought it was cheap then. I loved it at 80, so I bought some more. I think it's I think it's just the biggest dog on the JC. And once you've bought the biggest dog on the JC, it usually there's a few quick bucks to be made once it turns. So if it does pop, it pops quite quickly. It's popped about 20% now, and We've unloaded the bunch that we've bought at $83, but I do think that if oil markets stabilize around these levels, and if the management, just sort out some of the very easy sortable problems in the business, like the coal issues, then you've got a business that's worth at least 150. With that, I think oil and gas companies will come back into favor in the market. We're seeing the political correct ESG type of attitude in the market being dropped at the moment, similar to what we've seen companies moving in the US already dropping their DEI stance. So if that happens, there will be a more institutional demand for ONG companies and will lift that sector as a whole.
Yeah, I like that. And I like to point around, even dogs have their days at some point. David, are you brave enough to try your hand at Sasol?
It is going to be a trading company, and having gone down so far now, there's always the opportunity that it can, come back pretty fast. And when it does, you can make money. But we keep forgetting the chemical side. We always focus on the gas side and the energy side and the coal side. But Chemical price is still under pressure, and we come back to what I said earlier about a global economy that's just languishing, that's not doing anything, and you need chemical prices to pick up as well for Sasol to benefit. So don't forget that side of the equation. But here as well, they just, I don't know, they create their own problems, and that's an issue.
Yeah.
So when we start to see them no longer saying, when we no longer have to talk about structural problems in Sasol, then you're going to see Drikus get his 150 plus,
Okay, we'll wait patiently for that. David, GLP-1 drugs, Eli Lilly, Novo Nordisk, had a bit of a tough couple of months. You hanging on? You buying more?
Yeah. You know what? I like themes, and I like to look at, the same as I look at the AI theme, the same as you look at the energy demand that's going to come with the development of AI. This is a big theme. It's when I say it's relatively new, it's only recently that this has captured the attention and these GLP blockers have come on. It's going to take time before they're able to get their supply chains right and demand. I mean, when you look at the absolute results, they're astounding. We get worried because they might have missed on their, yesterday Eli Lilly came out and said the sales of Zepbound and what's the other one? There's two of these, that kind of missed. But still, I mean, the amount that they actually did sell is astounding. So I think just look at the results, look at where this is going, because this is a theme. It's going to change the way we live. And I know they've come under pressure, but you've just got to look through this. I'm trying to think, what was Zepbound and, Manjaro.
Manjaro, that's the other one.
I don't know. I've got to learn these names.
I just call them. Drikus, the GLP-1 drugs, are they any interest from you?
I haven't got a dog in this fight.
Fair enough. Then I'm going to follow up with Telkom. Questions coming through around Telkom. It is a telco, but it's different from the MTNs and the Vodacoms. They got rid of their SwiftNet. Some folks will tell you there's a ton of value there. Drikus, your take on Telkom?
Telkom, yeah, ton of value, obviously, but there has been forever a lot of fixed assets that they supposedly can sell. I just don't see it happening. There's been time and time again, there's been suitors for, a whole bunch of their assets, and it just falls apart. I'm not sure that the assets are really worth what they, what it says on the books. Mm-hmm. So, and I don't see the value that there can be. I don't see that ever being realized. But I'm happy to be proven wrong. A lot of investors in SA will be happy to sell their Telkom shares and to realize a higher value. But I've been fooled more than once.
No, fair enough. David, Telkom, I've also been fooled more than once.
The MTN story. Yeah. It's a difficult industry. And how they're going to really grow where it's a saturated, everybody's got their contracts, they can only steal from MTN or Vodacom. I wouldn't pick a fight with either of those. And we go back, they've still got legacy issues. They've still got those old products that they have to keep servicing, which, yes, they're getting on top of it, but it's still a bit of a drag on their profitability and on management time. So I'm with Drikus. I watch it go up and down. I watch it go sideways. I watch people talk about it, but I'm not sure it's going to go anywhere.
I wonder if there's still some corporate out there with an old school PABX that Telkom has to maintain. David, question coming through about local REITs. The question is, an excellent 2024. We're not going to do as well this year, but we should get maybe 10% dividends. Do I hold on to REITs or do I perhaps take some profit?
Hard to say. It'll probably stay where it is. I think we all built in that we were going to get a couple of more interest rate reductions, which would have helped them in a big way. Mm-hmm. Not going to happen. Yes, certain things have improved in terms of provision of electricity, but costs are still high, and running these places is still high. And also, it's The economy is not really taken off to a point where we're going to fill some of the gaps that, we hoped would be full. I'm talking in letting outside of maybe retail or something. But I'm watching from a side. I thought there'd be, I was one of these persons who thought that we'd see more rate reductions and things would improve and had an eye on, on REITs, but I don't know.
Drikus REITs, I mean, it was a great 24, but I mean, it was also for an immensely low base and a number of really, really tough years. I mean, it's relative to where they've come from. Your take on the sector?
Yeah, I remember if you go back a few years, these guys were busy with all kinds of financial engineering.
Yeah.
And Regulation 28 obviously, funneled a whole lot of money into that sector. The standard RA asset allocation was 10% towards REITs. If you just looked at somebody's random RA statement. But I do think a lot of that is behind us. Rental escalations are starting or revisions are starting to normalize. And we've made a lot of money with it in 2024, loaded up in 2023, made a bit lighter here and there. And I do think there's some value here and there. I think valuations are fair at the moment. But I do think some of them will have some stronger earnings coming through. Remember that the interest rates have only started to drop end of last year. We might see some little bit of interest rate, cuts beginning of this year. Let's hope so. Those are still to filter through to the income statement. Those haven't filtered through to the income statement yet. So I think those will, income statements will look a bit better in 2025. But not a lot of upside left after the run that we've had. We need 2% plus growth locally and lower interest rates for them to run from here.
Drikus, to stay with you, a question coming through around Supergroup. Bought it a couple of years ago after the announcement of the sale of their Australian business amid break even. Is there anything left to hold on to, or should I take my money and run? Drikus, Supergroup.
Oh, yeah. We bought Supergroup back, I think, at 45 cents.
Wow.
Alan Gray tried to restructure the whole thing, and there was a capital raise and great management team. They turned that business around and got rid of a lot of the non-core businesses. But I think that story is long over. I'm not too keen on holding Australian businesses at the moment. I think that's the ultimate bubble market with regards to property and just the economy as a whole. So I'm not keen. Well, in all fairness, they're one of the few companies that made it actually in Australia. Yes. They're doing well there, but I just don't. I don't know. It just doesn't. Yeah, I'm not there.
No, not there. And David, I'm not going to grab your attention on that because I want to go do some stock picks. S&P 500, which is maybe brave. We'll know in a year, but you're picking S&P 500.
Listen, you can't think a month or 2 weeks, or you've got to look down the line. And I think what's going to drive the S&P is probably the same earnings that drove it last year. I still think the earnings are very strong, and despite the hiccups that we're seeing now with failure of interest rates to come down and interest rates likely to remain, only 1 or 2 cuts, I think earnings is going to kind of trump that. Excuse the pun, but so I'm backing on earnings being the driver of the S&P. What would we see if it's maybe 10% this year? I'd be thrilled with absolutely 10%, hopefully 15%, but certainly not what we saw in 23 and 24.
Okay, no more 28%. So noted. Drikus, you're going with Landridge. Never heard of it before. Tell us the what, the why, and the how.
It's only listed, I think, in 2021 or 22. They own about 240,000 acres in West Texas in the Permian Basin, to be sure the Delaware part of the basin. And they're basically like a Texas-specific land company. So call up TPL on your ticker and you'll see what that, that makes Amazon look like it's looking for parking. But same business model basically, but they're new kids on the block, and they've got gas royalties, oil and gas royalties, and water processing royalties. A lot of water is a big issue in West Texas and in New Mexico. And the third thing is they're going to build data centers there. They've just signed their first lease in 2024, a data center lease. So most of the US's AI, or so the company says, are going to be processed, and the data centers should be built in West Texas, which have got all the, the climate, the land values, etc., the energy, the water, everything they need, and a lot of fiber also going through that area, so latency won't be an issue. So that's the next step, is for data centers being built there, first one being signed. We've made about 110% in the first 6 months that we've held it. I'm not not discounting another 110% over the next 6 months, but if the thesis plays out, you've got a 10-bagger here.
Okay, a 10-bagger. David's just sitting there in wonderment. Absolutely, we all get to learn. That's all for Stockwatch today. Thanks to our guest, David Shapiro from Sasfin Securities, S&P 500, Drikus Combrinck from Capicraft, going with Landridge. Up next, the close. Stay watching.